Most traders don't fail because they lack a strategy. They fail because they can't wait. In the world of day trading, crypto, and forex, the market is a master manipulator of your emotions. Today, we reveal the one psychological skill that separates the losers from the consistent winners. It's not about finding more trades, it's about the ability to stay patient until the market gives you a real setup. If you've ever struggled with overtrading, FOMO, or the urge to just do something, you're not alone. Revenge trading and FOMO are the silent killers of your capital, but there is a way out. In this video, we're going to build your trading psychology step by step. We'll look at how the pros stay disciplined when everyone else is panicking. Whether you trade Bitcoin, stocks, or forex, this mindset will transform the way you see the market. Because in this game, the patient always take money from the impatient. Let's begin. Discipline isn't something you're born with, it's built in the hours before the market even opens. While most traders are waking up and chasing the first green candle, the professional has already done the work. The real work of trading isn't clicking the button, it's the hours spent watching and waiting for the setup. A professional routine is a filter. It filters out the noise, the FOMO, and the low probability trades. You need a checklist. If every box isn't checked, there is no trade, period. This routine is your shield. It protects your capital from your own impulsive urges. If your trading feels exciting, you're probably gambling. Professional trading should feel almost boring. Consistency comes from a repeatable process. You follow the routine, and the profits follow you. Tonight, I want you to write down your routine. If you don't have one, you're already behind. In part 3, we'll dive into the biology of FOMO. But first, master your routine. See you in the next one. To master patience, you first have to understand why your brain is literally wired to make you lose money. When you see a big green candle, a part of your brain called the amygdala takes over. It's the fight or flight center. In an amygdala hijack, logic is shut down. Your prefrontal cortex, the part that follows your trading plan, is bypassed. Your brain starts chasing the dopamine hit of a winning trade, even if it's a low probability setup. You feel your heart rate climb. You get tunnel vision. You're no longer a trader. You're a gambler following an instinct. The secret to breaking this cycle is the biological reset. You have to physically calm your nervous system. By understanding this reaction, you can begin to rewire your brain to see the wait as the win. Consistency is about becoming the mountain, unmoved by the fleeting movements of the market. Your biology isn't your destiny. In part 4, we'll give you the mental anchors to stay grounded. The brain is your most powerful tool. Learn to use it. See you in part 4. Understanding your biology is the first step, but in the heat of the moment, you need mental anchors to keep you grounded. A mental anchor is a rule, a thought, or a physical action that pulls you back from the edge of an impulsive trade. Anchor number 1, your why. Why are you trading? Is it for freedom, for family, or for the thrill? High-stakes decisions need deep roots. When you remember your long-term goal, the temporary urge of a 1-minute chart setup loses its power. Anchor number 2, your environment. A cluttered desk leads to a cluttered mind. If your space is chaotic, your trading will be too. Your physical space should reflect the professional trader you want to become. Clean, focused, and purposeful. Anchor number 3, the step-away rule. If you feel that heat rising in your chest, you must leave the screens for 10 minutes. 10 minutes away from the screen gives your logic time to catch up. The market isn't going anywhere. It will be there when you return. Anchors give you the strength to stand still while the market storms around you. Master them, and you master the wait. In our next segment, we'll tackle the final piece of the puzzle, probability thinking. Stay disciplined. Welcome to the final psychological shift. To master patience, you must stop thinking like a gambler and start thinking like the house. The casino doesn't panic when a player wins a hand. They don't celebrate when they lose. They know the math. A professional trader has an edge, a mathematical advantage over time, but that edge only works if you let it play out. Stop judging your success by one trade. Start thinking in sets of 20, 50, or 100 trades. The reason you're impatient is usually your ego. You want the market to prove you right now. But the market doesn't care about your opinion. It only cares about liquidity and volume. When you see a setup, you aren't seeing a guarantee. You're seeing a high probability. That's it. With a 3-to-1 reward to risk ratio, you can be wrong more than half the time and still be incredibly profitable. Once you accept the math, patience becomes easy. You aren't waiting for a trade, you're waiting for your edge. The lion doesn't chase every gazelle. It waits for the one that offers the highest probability of success. When you think in probabilities, you detach from the outcome of any single trade. The loss is just a cost of doing business. Think of a losing trade like a light bill for a restaurant. It's just a required cost to keep the doors open. The law of large numbers states that over time, your results will inevitably move toward your theoretical edge. This is how you win. You stay in the game long enough for the math to work in your favor. From today on, I want you to commit to the set. Don't judge yourself until you've hit your 50th trade. The path to consistency is a long road, but it's the only one that leads to the top. You've learned the biology, the routine, the anchors, and now the math. You have all the tools. Now the only thing left is to put them into action. Patience isn't just waiting, it's waiting with a purpose. Remember, in this game, the patient always take money from the impatient. Master your mind, master the market. Subscribe for our next deep dive into real-world case studies. See you there. Theory is one thing, but seeing it in action changes everything. Let's look at 2 real-world cases that define the cost of patience. Case number 1. A trader will call Alex. It's 2 a.m. and Alex just lost a small controlled trade. But Alex is tired and Alex wants to get even. Alex breaks his rules. He doubles his position size. He knows the market has to bounce. He's no longer trading, he's fighting. In 10 minutes, Alex loses more than he made in the entire month. All because he couldn't wait for his nervous system to reset. Now, case number 2. A professional trader named Sarah. Sarah has been watching the same level on Bitcoin for 3 days. Price gets close, but Sarah doesn't chase. She waits for the specific entry trigger her plan requires. She is the predator. On the 4th day, the setup hits. Sarah enters. She doesn't hesitate because she's done the work of waiting. The trade moves in her favor immediately. Sarah makes in one trade what Alex lost in a week of frantic activity. The difference wasn't the strategy. Both Alex and Sarah had a plan. The difference was the ability to stand still. Sarah tracked her weight. Alex ignored his. In part 7, we'll show you how to journal for discipline. See you then. There's an old saying in business, what gets measured gets managed. If you don't track your patience, you can't improve it. A professional journal isn't just a list of wins and losses, it's a record of your mental state and your ability to follow the plan. Tip number 1, track the weight. Write down exactly how many hours or days you spent watching the market without clicking the button. This reframes doing nothing as doing the work. Every hour you spend waiting for your setup is a victory for your discipline. Tip number 2, grade your discipline. A losing trade where you followed your plan is an A. A winning trade where you broke your rules is an F. In the long run, the A grades will lead to profit, but the F grades, even the winning ones, will lead to your eventual ruin. Tip number 3, the weekly review. Every Sunday, look at your journal. Identify the moments where you felt impatient. What was the trigger? When you see the patterns, you take away their power. You move from being a victim of your emotions to being a master of your data. Journaling is the mirror that doesn't lie. Look into it every day and watch your patience transform. With a journal, you have a weapon. In part 8, we'll give you the shield, advanced risk management. See you there. Patience gives you the edge, but risk management is the armor that ensures you stay alive to use it. Without it, you're just one mistake away from zero. Think of risk management as your suit of armor. It's designed to take the hits so your account doesn't have to. Rule number 1, the 1% rule. No matter how perfect the setup looks, never risk more than 1% of your equity on a single trade. If you risk 1%, you need a string of 100 losses to blow your account. If you risk 10%, you're gone in 10. Math doesn't lie. Rule number 2, correlation. If you're long on Bitcoin, Ethereum, and Solana at the same time, you aren't diversified. You're just tripled leveraged on the same trade. When correlation hits, everything falls together. A patient trader knows when to step back and reduce their total exposure. Your primary job as a trader isn't to make money, it's to protect the money you have. Profit is just a byproduct of survival. Build a fortress around your capital. If you don't lose your money, you can't lose the game. Patience is the gatekeeper. Master risk and you remove the fear. Without fear, patience becomes your default state. Armor is great, but even the best will take hits. In part 9, we'll show you how to handle the losing streaks. See you there. Losing streaks are the ultimate test of your patience. It's not about if they will happen, but how you react when they do. Even a 60% win rate can have 5, 7, or 10 losses in a row. This is just variance. It's part of the math. When you lose money, you also lose mental capital. Your ability to make logical decisions degrades with every red trade. If your mental battery is empty, your patience is gone. You are now at your most dangerous. This is when the revenge trades happen. You need a stop rule. If you hit 3 losses in a row, you walk away for 24 hours. No exceptions. Walking away isn't quitting. It's a strategic retreat to protect your edge. The market will still be there tomorrow. Your mental clarity might not. The comeback doesn't happen by trading faster. It happens by being even more patient. You wait for the highest probability setup to rebuild your confidence. True mastery is found in the red. How you handle your losses defines how you will handle your millions. Stay in the game. Protect your mind. The sun always rises after the darkest night. In our final segment, we'll look at the lifestyle that sustains this mindset. I'll see you in part 10. Patience isn't a light switch you turn on when you open your charts. It's a muscle you train every single day through the way you live your life. Pillar number 1, sleep. If you are sleep deprived, your prefrontal cortex is offline. You'll make impulsive mistakes before the market even opens. Pillar number 2, physicality. Trading is high stress. If you don't burn off that stress through exercise, it will burn through your patience at the screens. The discipline you build in the gym is the same discipline you use to wait for your setup. It's all connected. Pillar number 3, detachment. If trading is your only source of self-worth, every loss will feel like a personal attack. You need hobbies that have nothing to do with money. When you have a rich life outside of the market, you don't need the trade. And when you don't need the trade, you become the most patient person in the room. You've completed the masterclass. You have the biology, the routine, the anchors, the math, and the lifestyle. The journey to consistency is long, but the view from the top is worth every second of the wait. This is Lord Black. Go out there, protect your capital, and master the wait. I'll see you at the top. Masterclass Part 1 is complete. Subscribe for our next block of advanced execution case studies. Stay patient. Welcome to Block 2. Now that you have the foundation, we're going to look at specific setups where patience is the difference between a loss and a windfall. This is the high volume squeeze. Price is trapped in a narrow range and the energy is building. Most traders enter here out of boredom. That's a mistake. If you enter while the spring is still compressing, you're just guessing the direction. You're paying for information that the market hasn't given you yet. This leads to the fake out. You get stopped out and then, moments later, the real move starts without you. Impatience is expensive. A patient trader waits for the confirmation. You want to see a decisive break and a massive surge in volume. That's the market telling you the spring has released. When the volume hits, the probability of a successful trade skyrockets. You aren't chasing a dream anymore, you're following the flow. By waiting just 10 more minutes for that volume spike, you avoided the trap and captured the entire move. That is professional execution. Don't be the one who shoots at every movement in the bushes. Wait for the clear shot. Wait for the high volume setup. Mastering the squeeze is about mastering your own boredom. In Part 12, we'll look at the trend exhaustion. Knowing when to stop is just as important as knowing when to wait. See you in the next one. In trading, the finish line is rarely marked. Knowing when a move is over is just as profitable as knowing when it starts. This is an overextended trend. The rubber band is stretched to its limit. Amateurs see this and buy because they're afraid of missing out. Professionals see this and start looking for the exit. Then comes the climax, a massive price spike on huge volume. It looks like the start of something big, but it's actually the end. It's the blow-off top. While price makes a new high, the internal strength of the market is fading. This is the divergence. The momentum is gone, even if the price hasn't realized it yet. The hardest part of patience isn't waiting for a trade, it's waiting for the next setup after a big win. Your greed will scream at you to just take one more. If you ignore the signs of exhaustion, you'll be caught in the reversal. You'll give back half your gains, or more, trying to catch the last 5% of the move. A professional exits with grace. You don't need to catch the exact top, you just need to catch the meat of the move and have the patience to sit out the rest. True mastery is the ability to watch a movie continue without you and feel absolutely nothing. You are waiting for your next high probability environment. Respect the trend, but recognize the exhaustion. In Part 13, we'll look at the long-term HODL psychology. Sometimes patience isn't measured in minutes, but in years. See you in the next one. The hardest form of patience isn't waiting for a setup, it's holding a winning trade while the world tells you to sell. This is the long-term HODL. Wealth isn't built in a day. Like an oak tree, the largest profits come to those who can endure the winters and the storms of volatility. To hold long-term, you must ignore the noise. The 5% daily swings, the news headlines, the social media hype, it's all just static. The signal is the long-term trend. The noise is everything else. A patient investor builds a filter that lets the signal through and blocks the rest. Can you watch your account drop 50% and still hold? If the fundamentals haven't changed, the only thing that has changed is your fear. Drawdowns are the price of admission for multi-bagger returns. If you can't stomach the dip, you don't deserve the moon. Patience is the fuel for compounding. The longer you stay in the trade, the more the math works for you, not against you. Don't interrupt the compounding. Every time you sell too early out of fear, you reset the clock on your generational wealth. Think in decades, not days. Mastery is the ability to wait for the results you know is coming. In Part 14, we'll cover recency bias. Your past trades are lying to you. In the next part, we'll show you how to see the market fresh every day. See you then. Your last trade is lying to you. Whether it was a massive win or a painful loss, it is the greatest threat to your future patience. This is recency bias. It's the tendency to give too much weight to the most recent events. It clouds your judgment and poisons your discipline. After a win, your brain tells you that you've cracked the code. You get impatient for the next trade, skipping your rules because you feel invincible. Overconfidence is just as deadly as fear. It makes you blind to the risks and leads to the biggest losses of your career. After a loss, the bias works the other way. You see a perfect setup, but you hesitate. You're waiting for extra confirmation that doesn't exist. This is analysis paralysis. Your last loss has stolen your conviction. You've replaced your trading plan with your trauma. The market has no memory of your last trade. To the charts, every setup is a fresh, independent event. You must treat it that way. At the end of every session, wipe the slate clean. Forgive yourself for the losses. Forget the wins. Come back tomorrow with a fresh mind. When you break the bias, you unlock a new level of patience. In our final part, we'll look at the quiet confidence of mastery. The summit is in sight. One more step. See you in the finale. You have reached the summit. You've mastered the biology, the routine, the math, and the mindset. Now, you must embrace the finale, mastery. In the beginning, patience felt like an effort. It felt like a battle against your own nature. But in mastery, the battle is over. Patience has become your default state. You no longer try to wait. You simply exist in the wait until the market aligns with your truth. This is the flow state. You are one with your process. You are detached from the outcome because you have absolute faith in the system. The amateur needs to prove they are right. The professional only needs to execute. This is quiet confidence. It is the loudest thing in the room. You are the conductor of your own capital. You don't chase the music, you lead it. Every weight is a note in your symphony of consistency. Always remember, in this game, the patient always take money from the impatient. That is the only law that matters. The market is yours, not because you are smarter, but because you are more disciplined. You have outweighted the world. This is Lord Black. Go out there and master the weight. I'll see you at the top. Masterclass complete. You have the tools. Now go execute. Stay patient. You have the knowledge. You have the tools. Now you need a plan to put them into action. Welcome to your final roadmap. Step 1. Audit your routine today. Step 2. Update your journal with your patience grade. Step 3. Enforce your risk shield on every single trade. I'm challenging you to a 30-day patience streak. No FOMO, no revenge trades, no rule breaking, just pure mathematical execution. Consistency is built day by day. Every check mark on your calendar is another brick in the wall of your professional future. Find an accountability partner. Show them your journal. Let someone else see your grades. Discipline thrives in the light. No master trader reached the top alone. Surround yourself with those who respect the math as much as you do. Mastering patience is a lifelong journey. It doesn't end with this video. It starts every time you open your charts. The future belongs to the patient. You have everything you need to become the trader you've always wanted to be. This is Lord Black. Thank you for embarking on this 16-minute journey with me. Now go master the weight. Full masterclass series complete. Subscribe for future advanced blocks. The market is yours. Stay disciplined.